Hey guys, Sean here. We are in a weird state of affairs today. The markets are on edge waiting for what the Fed does next. It's not about how strong or weak the economy is, but whether the Fed is going to hike or ease. Now, after the recent Q2 GDP numbers came out negative, the stock market rallied, gold rallied, and everyone's bullish. The market believes that the Fed is done with their hikes or are at least slowing down. But I did some digging around, and there's a good chance the Fed is actually setting up the market for further demand destruction. Now, what do I mean? They are going to hike rates even more and even sell off their balance sheet because their number one enemy is inflation. The Fed just reviewed their intentions and we are going to cover it. They do not care if you are in a recession or not, they are focused on fighting inflation. Now, the president of the Minneapolis Fed, Neil Kashkari, came out saying three critical statements that tell us that the rate hikes aren't done yet. Far from it. Neil said, whether we are technically in a recession or not doesn't change my analysis. I'm focused on the inflation data, I'm focused on the wage data, and so far, inflation continues to surprise us to the upside, wages continue to grow. I think this statement really tells us how the people at the Fed think they are shaping the narrative to define what is strong and what we need to focus on. Now, if we read his second statement, typically recessions demonstrate high job losses, high unemployment. Those are terrible for American families, and we are not seeing anything like that. It tells us one thing: the Fed believes the economy is still strong. I know it's insane. I know it doesn't make sense, but this is what they believe in. They are watching the official unemployment numbers, and at 3.6%, they believe everything's okay. They are right, and we are wrong. Because we have to remember what the Fed's door mandate is. They are watching both unemployment and inflation. They see unemployment at record lows while inflation is at a 40-year high of 9.1%. So to them, inflation is the bigger threat. But let's continue to his final statement. We are going to do everything we can to avoid a recession, but we are committed to bringing inflation down and we are going to do what we need to do. And he closes off by saying, we are a long way from achieving an economy that is back at 2% inflation, and that's where we need to get to. I think this is clear as day, telling us what the Fed's priorities are. It's inflation fighting and not recession prevention. And this means that if inflation continues to stay high in the next few months, let's say July and August inflation numbers comes in red hot at 8 or 9%, it's very likely the Fed will hike rates even more. Now, I did a poll yesterday on which is more painful: inflation eating away at our savings or asset prices coming down to earth. And over 80% of you guys say that it's inflation, and it's not just this community saying it. Across America and the world, inflation is the top concern for families just looking to get by. Now, we all have been seeing the headlines over the past few days. We know that Janet Yellen, Jerome Powell, and Joe Biden, they all have been denying the word recession. They are trying to redefine it, and I don't think it is by accident or it's because they are clueless, right? I think they are setting up the stage. They are setting up Powell to do a slam dunk on the economy. They are giving him room to hike rates to the moon if inflation continues to be persistently high. With the midterm elections fast approaching in November, I think the biggest threat to the voter base is inflation and not asset prices crashing, right? If we take a look at the distribution of household wealth in the US, we can see that the top 10%, especially the top 1%, have gotten much richer than the rest over the decades. And the real median household income has only grown by 26% from $53K to $67,000. But during the same time period, housing prices has jumped by at least 500%. So we have people priced out of housing, more people living paycheck to paycheck, and that is a big problem. There's a lot of votes that will evaporate if inflation isn't controlled soon. And if asset prices crash, it'll be the rich that will be hurting the most, at least in nominal terms. So there is a method to the madness, right? A deeper recession is going to be the cure for inflation. The Fed can only influence the demand side of the equation, not the supply. And because of this, they are likely going to crush demand to the ground. I want us to travel back in time to 2021, during the time of the lockdowns and helicopter money, just after the Fed printed trillions and increased their balance sheet from $4 to almost $9 trillion. And I really want us to pay attention to this part because it is very important. For much of 2021, even though inflation was trending up towards 5 to 6%, we had Janet Yellen and Powell, the dynamic duo, saying that inflation was transitory. They said we had nothing to worry about. We shouldn't panic and just keep calm. Now, for the longest time, we all thought they were delusional or clueless or were looking at the wrong set of numbers, right? But if we dig deeper and we focus on the Fed's dual mandate, suddenly everything starts to make total sense. Once again, I need to bring us back to the dual mandate. The Fed is responsible to pursue maximum employment and price stability. We know it's a bipolar mandate because you can't affect one without the other. But here's the beauty. If you pursue maximum employment by lowering rates, there will be a time lag before prices or inflation gets affected, right? So in the interim, you can still declare victory. And the converse is also true. If you crush inflation by hiking rates, there's also a time lag when employment is still high like what we have today, but reality will catch up sooner or later. Now, just after the 2020 lockdowns, unemployment was still high, even as inflation was starting to shoot up. And the Fed had no choice but to use a delay tactic, telling us that inflation was transitory to continue to keep this charade up, to keep interest rates low, to drive unemployment down. But I want us to pay attention to March 2022. This was when unemployment bottomed out. It was also when the Fed suddenly reversed course on their policy and started declaring war on inflation. Remember, the first rate hike of 25 basis points was announced back in March 2022. They waited for unemployment to come down enough before they decided to switch up and fight inflation. So the current situation is starting to make a little bit of sense. We need to understand which chart the Fed is focusing on right now because it will determine their moves going forward. We need to look at the clues and understand what the Fed is really trying to say. We need to carefully analyze the underlying motives the US government is trying to feed us as well. So the narrative right now consists of two parts, right? The economy is strong because unemployment is low, and we are focusing on tackling inflation. And that is why they are so desperate to redefine recession. And it seems only the National Bureau of Economic Research, or NBER, can officially declare a recession. Not you and I, but them. And because the Fed doesn't typically raise interest rates during a recession, I have to say this again, right? During the past few recessions in 2008, 2000, and the 1990s, rates were always lowered and not typically increased. So as long as we are not officially in a recession, the Fed has room to maneuver and continue with their rate hikes because it'll be very bad optics. It'll be seen as kicking the economy while it's down. So now I hope it should be very clear why the Fed and the government are denying its existence. And this is why I believe the next few inflation numbers coming out for July, August, and September are going to be very critical. They will probably decide if the Fed is going to slap the economy with another round of 50 or 75 basis points rate hikes. And right now, the whole world is starting their own round of hikes as well. Australia is starting to hike. The Bank of England is about to hike their rates by a historic 50 basis points. And I don't think the Fed is done with theirs yet. But let's turn the conversation back to us. What does this mean for us? Now, if inflation data comes out high for July and August, the Fed will hike rates up even more. They are looking at the data, and I believe it's not good, right? Remember that at this point, the Fed is reacting to events and not really anticipating them. They are in damage control mode, and we need to see the trend by now, right? Every time something horrible is about to happen, maybe it's high inflation numbers or negative GDP, they will front run the news and tell us that there's nothing to worry about, right? Inflation might be high, but it's under control. Don't worry, GDP might be negative, but it doesn't mean we are in a recession. It's the same song and dance over and over again. So let's assume inflation data stays high or gets worse. The markets will get a shock and crash like what's happened after June CPI numbers came out. Will it be the final crash before the bottom? We don't know. We have to watch the inflation charts. But another big worry is how company earnings will be going forward. Right now, it's predicted that consumers will run out of money by December, and the personal savings rates has plunged to a 10-year low of 5.1%. Savings rates were slightly worse in 2008, just before the recession started, because if the Fed hikes rates aggressively and we see company earnings collapse in December, we could see another leg down for the stock market, and actually every asset will suffer as well, right? Gold will likely tank, real estate will also crash, everything will get clobbered in price, and that might be the direction we are moving towards. I don't think there are any coincidences around, and as laughable as this might sound, I think the people in the Fed aren't exactly stupid. They have the data, they have the experience, they are economists, but they are just caught between a rock and a hard place. And we really need to hear what they are saying. They are telling us inflation is out of control. People are getting desperate. They're getting desperate, and a lot of their plans have backfired, especially the sanctions on Russia. Yes, hurt Putin, but now a dangerous energy game is being played over oil and gas in Europe, and those are supply side concerns that the Fed can't solve with their rate hikes. So the situation going forward isn't rosy. We're going to see our standard of living continue to diminish over the next 6 to 18 months thanks to sky high inflation, and it's likely the Fed will continue to hike rates until something breaks in the economy. I believe the trigger for the Fed to finally stop hiking rates will likely be unemployment soaring to the moon. And how bad can it get? Back in '08 recession, unemployment shot up to 9.5%. 2020 saw 14% unemployment, and those only came down once the Fed decided to slam interest rates to near zero and printed up a whole bunch of money. We need to get prepared for the next 6 to 18 months because we could see the market tank even lower. Inflation is a problem not easily solved, especially when there's so much money that has been printed over the last 2 years, and supply issues are just going to get worse, right? Now, can all this reverse and the Fed stop hiking rates for the time being? Absolutely. If suddenly inflation data cools down, maybe drops to say 5 or 6 or even 7%, then the Fed might do a pause and we'll see markets rally. However, as it stands, that might be quite unlikely. There's a reason why there's so much denial surrounding the recession. Remember, guys, according to the Fed, officially, we are not in a recession. The economy is strong and it's 2 thumbs up. But I think you and I know better, right? So prepare, save money, be prudent. Time is running out. So let me know what you think. Is the Fed's master plan really to crush demand completely, or are they really clueless about the definition of a recession? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through this recession. Thank you guys for watching, and I'll see you soon.